Welcome to Nerdbull1669 Weekly Trading Outlook tips for this week, 26th to 30th of January 2026. Before we move on to this week, right, the trading week of January 19 to 23rd, 2026, right, was a masterclass in volatility driven by a cocktail of geopolitical tariff talk and also pre-earnings positioning. So after a sharp risk-off side following the Martin Luther King Jr. Day holiday on the 19th of January, the market staged a late week recovery as tech leadership stabilized. So the market summary for 19 to 23rd January 2026, the week was characterized by a V-shaped mini recovery. So early week sentiment was actually hit by fresh tariff rhetoric aimed at European trade partners, causing the S&P 500 and Nasdaq to shed nearly 2% by Tuesday. However, the deep buying right emerged as NVIDIA CEO Jensen Huang reaffirmed that strong AI demand, helping the Nasdaq and the week essentially flat. So S&P 500 closed at 6,915.10, down roughly about minus 0.3% for the week. So Nasdaq 100 closed at 25,603.93, eking out a minor weekly gain of a positive 0.1%. So the key driver for last week was energy and materials outperformed. Energy actually gained 3.5% and materials gained 2.3% respectively, as commodity gained ground while financial struggle by dropping about 2.4% under regulatory uncertainty regarding the credit interest rate caps. So coming to this week, the market outlook for 26th January to 30th January. So the focus actually shift to the mega cap earnings, with the 2026 are expected to be a year of broadening out. Investors are watching if the S&P 493 can carry the torch while the Magnificent Seven justify their valuation. So appreciate if you could share your thoughts right in the comments section on this video. Do help to like and share this video. We greatly appreciate your help. Appreciate if you can like and share this video if you find this video useful and helpful for you. Thank you for your support and we look forward to you supporting the channel for more content. So leading into the week of 26th January to 30th January 2026, right, the macro landscape right, is defined by a delicate balance between the tariff-induced jitters and a resilient domestic growth engine. So here is the macro snapshot for the week ahead. So coming to the risk appetite, it's cautious optimism. So the risk appetite is currently in a stabilization phase following the mid-January volatility. So while the early week, right, the Greenland tariff headlines actually caused a sharp risk-off rotation. So the market successfully defended key support level by 23rd January Friday. So coming to this sentiment, the bullishness is being sustained by the strong Q3 2023 GDP revisions, 4.4%, and cooling labor market fear, which initial claim staying below 210K. So for the sector rotation, we are seeing a broadening out from a pure AI play into energy and materials as investor hedge against potential inflation and from the trade policy while staying long on the growth narrative. So coming to the rate direction, so it actually in hawkish pause, data dependent easing. So the trajectory for the rates, right, is currently crowded by a K-shaped economic outlook. So policy outlook, right, we're looking at the market is pricing a 25% basis point cut in Q1 2026, but the Fed Reserve, right, remains divided. So current policy is viewed as neutral, meaning further cuts likely require growth to dip below its 1.8% potential. So coming to the yield curve, the 10 years Treasury yield is hovering around 4.25%, reflecting a stubborn term premium as investors demand more compensation for long-term deficit and inflation risk. For the short end, the 2-year yield approximately at 3.61% remain range bound, suggesting the market has already baked in a dovish Fed trajectory, leaving little room for a further rally in the bond unless the data soften significantly. So coming to the volatility regime, actually looking at mean reverting to higher base. So we have actually moved away from the extreme low volatility environment of the mid 2025. So the VIX level ended last week near the 15.63 level. So easing slightly from its tariff scat high, but then remaining well above the single digit or the low teens level seen last summer. So for the regime shift, volatility is currently in a high sensitivity regime. So this means that while the baseline is calm, right, the market reaction function is to geopolitical news and the basically the trade wars, NATO friction, it's still much more explosive than in previous year. So coming to the precious metal signal, gold uh, last recorded at 4,936 and silver at 95. I think both of them are currently trading higher at time of this recording. So they are actually trading at a record high simultaneously with a rising stock market. So a rare discordant signal that suggests that institutional players are aggressively buying tail risk insurance via the hard assets. So for the key catalyst this week, right, we are looking at basically the mega cap earnings season accelerates with Microsoft, Meta, Tesla, and Apple scheduled to report this week. So this can drive volatility and directional conviction. And also we are expecting the Fed policy meeting coming on also scheduled on Wednesday, Thursday, likely holding the rates steady, but still a potential volatility driver depend on the Fed tone. So coming to the macro headlines, so we're still looking at tariff, physical policy, and geopolitical shift remains important. So for the base case, right, we are expecting a higher volatility and range bound action with short-term directionality hedging on the earnings execution and guidance. Now coming to the S&P 500 weekly outlook. So S&P 500 primary trend remain bullish. The for the trend continuation targeting the psychological level, the 7,000 level. So a breakout above the 6,940, which is last week high, right, will suggest a run towards a new all-time high. Okay, coming to the pullback risk level, we are looking at a failure to hold 6,850 would indicate a deeper correction. So the structural floor actually sits at 6,800. Breaking this would basically shift the short-term bias to neutral or bearish. So now coming to the Nasdaq weekly outlook. So a decisive daily close above the 25,710 will clear the recent week high and also signal a continuation of the AI lead rally. So coming to the Nasdaq technical levels, right? So strength above 25,710. If you mentioned earlier, a decisive daily close above this level will clear the recent week high and also signal a continuation from the AI lead rally. So for the failure below 25,200, right, this will be the recent swing low, and then this may set the floor for the current trading rectangle. Losing this level will risk a slide towards the 24,800. So coming to the weekly level for Google, so you need to clear the 330 resistance to trigger a impulse wave towards the $370 level. So invalidation at 311.77, which is a fair value. So we are looking at the above $330 for bullish buyers, and for invalidation, right, we're looking at below 312. So coming to the weekly levels for Meta, um, Meta is releasing their earnings this week for information. So it's bullish if it can clear the overhead resistance, dropping below 530 signal a market skepticism over the AI capex ROI. So we are looking at a bullish bias, right, above 680, and a invalidation below 590. Similarly, we are also expecting the Microsoft earning this week. So for the weekly level for Microsoft MST FT, right? So strong conviction above the 450 level. So a breakout over the 490 dollars, right, will target for 510 and above on the AI infrastructure optimism. So for the bullish buyers, right, we're looking at above $495, and for the invalidation, right, we're looking at below 450. So coming to the weekly level for Tesla, similarly, they are also releasing their earnings. So you need to hold the $420 support level. A break above the 460, we could be eyeing $480. So invalidation below $400 would target 380. So for bullish buyers, we're looking at above 460, so that it can actually strike for 480. So coming to the execution priorities for this week. So earnings reaction. So we have to be prepared for volatility around the reported results. So confirm beats, right, with constructive guidance generally will support trend continuation. So guidance misses often will trigger a short-term retracement or even sell-off. So for breadth focus, right, index will gain with a weak breadth, narrow leadership. So this tend to flatten. Breadth improvement, right, will be a strong confirmation signal. So for the volatility regime, right, so elevated VIX, right, or macro headlines will widen the trading range and increase, the false breakouts. So a bit of the risk management framework. So these are the three things that we should always keep in mind. So trade levels are not the opinion, and we should define the invalidation before we entry, and then also reduce size during the consolidation. Do practice discipline and patience with. So this video is actually for educational content only, and it's not financial advice. So the disclaimer, so the analysis and the result actually presented does not recommend or suggest any investings in the state stock. So this is purely for analysis purposes.